When you thought it can't get any worse, Elon Musk was already in the spotlight over forcing his workers to come back in person. He's had it up to here with the remote work and feels like people are more productive when they're in the office. And now, on top of that, when we get this new news, it actually starts to make a lot more sense that Elon is really trying to cut the fat, so to speak, here, be as efficient and capital light as possible. Tesla shares are now dropping after a report that Musk is targeting 10% job cut amid a super bad feeling about the global economy. Now, if you've been following the channel here, I've been saying that I think this rally is not going to last. And, it's a fake rally here, and things potentially could get worse. And I'm going to talk about why. We're going to touch on inflation and everything. But first, let's take a quick look at what Tesla stock is doing and then read this article here. So Tesla stock is down 8% today after it's actually been rallying over the past few days. And now we're basically back to down about 1 or 2% on the week here. But let's see what has Elon Musk worried here. So the global economy apparently is the world's wealthiest man concerned. An email with pause all hiring worldwide as its headline was reportedly sent to executives at the electric car giant Tesla. Reuters reported this late on Thursday. In the email, Elon Musk said that he had a super bad feeling about the economy and that employee headcount needed to be cut by 10% according to the Reuters report. Now think about this. Tesla's a company that's been doing very well. And I've been saying, if we do have a recession, Tesla's going to come out of it stronger than those are the likes of Ford and GM that are already so saddled with debt. But this just goes to show that, maybe we should be a little concerned. Elon clearly is, and he's just taking, or it could just be taking an extra precaution. I'm going to touch on my thoughts on if we're going into a recession or not after we get through the article here. And I think it all comes down to this one factor. We'll get to that in a minute. So Tesla employs around 100,000 people as of the end of 2021. Tesla shares are falling now, even as Microsoft cut its guidance ahead of the opening bell, blaming foreign exchange rates. Musk's apparent economic gloom comes on the heels of attention-grabbing comments by JP Morgan Chase Chairman and Chief Executive Jamie Dimon, who warned of a looming economic hurricane from rate hikes, the war in Ukraine, and inflation. The Reuters report comes on the heels of an apparent demand by Musk for workers to return to the office or leave the company. So again, all of a sudden, can you blame the guy for this now? I mean, first of all, it's his company. He's allowed to make his workers do what he wants. I mean, now when this comes on top of that, all of a sudden it makes a lot more sense. He's worried. He wants to make sure Tesla's operating at peak efficiency, right? So maybe cutting remote work to him is in the best interest of Tesla succeeding here. Tesla shares have dropped 26% so far in 2022 amid a technology-led rout for the U.S. stock market. The EV maker has struggled to get its Shanghai factories back online amid COVID lockdowns since late March in the major Chinese city that Bloomberg reports have cost the company 40,000 lost units. Now again, the whole Shanghai thing completely overblown, irrelevant, a blip on the radar in the long term, but it's going to hurt them for Q2. It's going to hurt them, and if they have a bad Q2 and the stock goes down a lot, I will be buying a lot more because I think it's irrelevant, right? Obviously, the factory is shut down. What are they supposed to do? Every company has business in Shanghai is going to have a bad quarter here. But Shanghai actually officially just lifted the lockdown, and hopefully we're not going to be doing those anymore, and we can kind of get back to some normalcy here. Elon Musk's fortune has dropped $43 billion this year, leaving him with a meager $227 billion. Now, guys, it is interesting. If we just take a quick look on YouTube here, doom and gloom is in. And it's unfortunate this is what it comes to. I mean, look at all this garbage. This is the only way you get clicks, though, This is how the YouTube algorithm works here. Stock Mo. Watch this immediately. Crash exposed. Now, look at this. This is ridiculous here. Ricky Gutierrez. One day, why are stocks dropping? Market crash update. The next day, we're about to skyrocket. I mean, give me a break here. Housing market crash. The 2022 stock market crash. You keep scrolling, and it's just utter garbage here. But I will say, let me give you the facts here. This is how I see this all playing out. The Fed has two jobs: to keep unemployment reasonably low, to keep inflation reasonably low. Unemployment is low right now, but the Fed is not concerned with the stock market. The Fed has two jobs: unemployment and inflation. We have inflation of around 8% right now. The Fed has said they want to get inflation to 2%. The only way that they can really effectively do that is by raising these interest rates, right? Which they've started to do. That's the main way. And when you do that, you increase the cost of capital. Debt is harder to come by. It's more expensive to borrow. Companies are not throwing money around willy-nilly, funding these startups that are unprofitable. People get a little bit more prudent. So this is going to hurt the economy because it will inevitably lead to jobs loss. So unemployment is going to go up. As long as inflation is high and the Fed keeps raising rates to try and combat inflation, the more the rates go up, the stock market will suffer, the businesses will suffer, right? You're going to start seeing, we're already seeing lots of hiring freezes, and now potentially Tesla looking to cut 10% of their workforce, although I don't know that it's been officially confirmed, but if we go with it, businesses are going to cut costs, try and save money as however they can to weather the storm here, because we don't know how long this will last. Now, if inflation does start to come down significantly, and I think there are a few factors that could help do that, all of this may be avoided and we don't go into recession. But if inflation does not start coming down rapidly, which you look at the world today and there's no reason for it to really, the Fed will continue to raise rates. The market is going to suffer. When the Fed raises rates, the market goes down. That's just how it works, right? Now, if things improved, if the Russia-Ukraine war ceased, if China ceased these lockdowns for COVID and the supply chain kind of normalized, it would definitely help with inflation. It's not going to solve it entirely, but at least with Russia-Ukraine, there's no end in sight here. So I don't think we can count on that. Now, again, nothing changes long term, right? If the market keeps going down, it's a great buying opportunity if you're investing for the long term here like I am. But I wanted to make sure that I was prepared at least for either scenario, because when 2022 started, I was basically 100% deployed in the market. I didn't have very much cash on the side, and I wasn't really able to capitalize on the drop as much as I would like to. So I was not going to let that happen again. So what I've been doing over the last couple months, and this is just my strategy, not financial advice, just what I'm doing, I've sold about 20% of all my non-core positions, right? So I have not sold a single share of Tesla. I have not sold shares in the companies that I truly believe in, Tesla, Palantir. I've sold about 20% of my other positions, right? So that if I'm wrong here, if the market if all this doom and gloom goes away, because usually when everyone's calling for a recession and a crash is exactly when it doesn't happen. Although if enough people believe it, we're going to think this recession into existence is more and more what seems like is happening, right? It's crazy because you would think, how do you go into recession with unemployment at like an all-time low? But again, all of there's basically these 5 huge factors: inflation, Ukraine, China lockdowns, gas sky high, all these problems we're having that are making recession possible. So I did that. I sold about 20% of the non-core holdings just so that if the market really tanks, I dollar cost average every month. I got my money that goes into index funds. I buy a little Tesla here and there. But I want to be prepared if the market really does tank that I can capitalize on it, because, if you can buy in at the low, be greedy when others are fearful, you make a killing. This is exactly what I did in 2020 during COVID. I was buying while everyone else was panicking. And obviously there we had a V-shaped recovery because the Fed, the government stepped in, introduced stimulus, pumped all this money into the market. But I don't think we're going to see that again, because it is responsible for this massive run-up and all this inflation, in part at least, partially the reason, depending on who you talk to, more or less of the reason. It's not going to happen this time, because if they were to do that, inflation would get worse. So the opposite will happen, and that's why I can see a protracted period here where the market either goes sideways or maybe it does get a little bit more painful, depending. Again, I think there's one key holding everything up right now. It's our last hope, is consumer spending. Consumer spending is still strong because people have saved up so much money over the past 2 years. They want to get out. They want to travel. They've been on house arrest essentially for 2 years. They want to spend money. Okay, so I think we're going to see travel, things like that take off. But for now it's holding up. But what happens when 3 months from now, if we get to the point where inflation, all these things are not going any better, people are already starting to get squeezed a little bit, right? It starts at the bottom. The people who are at the bottom of the scale here get hit the hardest. But eventually, the middle class, if things don't improve, are getting sucked dry when they're spending all their money at the gas pump, when they're spending all their money on higher food costs, and everything is more expensive. Our salaries have not gone up with the inflation. So that's the way I see it, is as long as inflation remains high, the Fed will be forced to keep increasing rates. And as long as they continue to increase rates, the stock market is not going to do well. Again, this may be resolved a month from now. Maybe inflation starts to come down. It could be resolved a year from now. It could take more than that to play out. But that's why I'm staying mostly fully invested. Like I said, took 20% of the non-core positions essentially off the table. And if the market really crashes, I'll be deploying that cash, right? If it doesn't, great. I took a little bit off and I'll still, take part in the upside here. Obviously, you can't time the market. Time in the markets is better than timing the market. And this is just because, I've done well so far and I'm trying to be a little bit conservative so I don't lose it all. But, if I were just starting out investing and I had, $1,000 invested, $10,000, and you're young and you have 30 years, it's not really a big deal. I mean, there's no reason to panic because you can just keep buying. And like, again, you're young enough, you've got 30 years to, make the money back. As long as you just consistently are buying, dollar cost averaging is a strategy that I've used and I think it works out beautifully, right? Because when I jump into stocks, and I build out the entire position immediately, they tend to drop after. So I think moving forward, I'm going to be gradually buying shares. Instead of buying 100 shares of a company immediately altogether, maybe you buy 10 shares 1 week or 1 month and then see how you feel a month from there, right? You don't want to get caught up in these, irrational exuberance and euphoria because a lot of these stocks that I bought while they're running up, they've all come crashing back down. Palantir is a perfect example. I love Palantir. I think it's a fantastic company with a great long-term prospects, but I overpaid a little bit for it. My average on Palantir is I think around $16 or $18. And that's a stock that's gone down as low as I think $6 now, right? So patience is a virtue, right? Dollar cost averaging is what I plan to do from here on out. Not financial advice. Gloom. Fink, Diamond, and Musk have the blues, and one forecaster says they're not gloomy enough. Oh boy. Again, usually when everyone's saying this, when they're calling for it, it doesn't happen, but there are a lot of problems facing the world right now. I mean, in any one normal year, any one of the headlines would be the big problem for the year. And now we've got like 5 of them with inflation, gas prices, Ukraine, Russia war, China lockdowns. I mean, we're getting walloped here. I mean, the anxious hum among Wall Street executives is getting louder. That is for sure. And again, so many people at some point you're calling for a recession, you almost think it into existence, right? Because the job market is strong and consumer spending is strong. But if those factors start to change is when I can really say things take a turn for the worst. And, for me personally, I know what it's like to be fully deployed. You bought the dip. When you buy the dip and it just keeps dipping, you spend all your money and the market crashes another 50%. It sucks when you have to sit that out on the sideline. So that's why I'm being a little bit more cautious because I am so fully deployed. I think I'm sitting on maybe 5 or 10% cash because I didn't sell 20% of my positions. I sold 20% of my non-core positions. So I kept even my non-core positions, 80% of them are still invested. So my cash position, I think, sits maybe somewhere between 5 and 10% right now. And I was going to continue dollar cost averaging either way, but that's just a little extra cushion I have here for if an opportunity arises that I really see that I cannot pass up. I plan to dump that money into the market over the next few months if things continue to get worse. So we obviously just had Jamie Dimon, not Jamie Morgan, a little typo here. Jamie Dimon from JP Morgan warned of an economic hurricane to come. Now BlackRock CEO Larry Fink has told Bloomberg he expects elevated inflation for years, along with bouts of fear creating more market volatility. Less grim was Bank of America's chief Brian Moynihan, who said the economy is still in pretty good shape. Again, it keeps coming back to this consumer spending. Unemployment's low. If consumer spending starts to go, that's when we're really in a world of pain because then these companies, they can cut all the jobs they want, but if they can't sell their products, we're really headed for the house of pain. All right. So again, I think it's all contingent on inflation. If we start to see inflation improve and it starts coming down, we may avoid the recession and things will get better. But if inflation, really sticks around here, which it really feels like it might, at least for the next few months here, that's when I foresee some issues or further pain in the market. Again, just my opinion, not financial advice here. I'm just telling you guys what I plan to do, how I'm handling this market downturn. Our call of the day says these honchos are not worried enough. A deep recession should start this quarter or early in the next, with U.S. GDP estimates tanking, but still too high, says Mike Shedlock, investment advisor for blah, 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 capital management. All right, so whatever, you get the point. There's a lot of doom and gloom out there, but you know what? People make money off the doom and gloom too. You have to realize that too. I mean, these clowns on YouTube here, and I mean, I'm guilty of it too. I've made a video, market crash, because unfortunately it's the only way that you get the clicks on YouTube. Like, it's so annoying. I hate having to be clickbaity, but if I post a video like, here's what I'm doing, it won't get any views, and it's really unfortunate. I wish that were not the case. But anyway, people clearly profit off of, doom and gloom talk. Someone like Robert Kiyosaki, love the guy, great, fantastic, life-changing book, Rich Dad, Poor Dad. But then for the last 20 years, he's calling every single year for the mother of all market crashes. And, if you call it enough times, eventually you're going to be right? So we have to keep that in mind as well. Real final sales was negative in the first quarter, and I expect a repeat in the second quarter because I do not believe retail sales will hold up. Again, this is all going to come down to that consumer spending. If people still have money, they're going to spend it. If they're getting squeezed hard at the gas pumps and everything else, then they're going to start spending less. I mean, it's pretty simple, how that all is going to play out. Let me know what you guys think down in the comments below. This is Vinny from the Investment Club, and I'll see you next time. If you enjoyed the video, don't forget to like and subscribe.